Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is the one and only commodities investing legend and the founder of Rule Investment Media, our good friend, Rick Rule. Welcome back, sir.
Pleasure to be with you. Thank you for having me back.
And
Pleasure.
also former CEO of Sprott
Oh,
USA.
yeah.
You always you just say Rick Investment Media, Rural Investment Media. You never mention the guy used to
Sorry.
Well, you don't.
run Sprott. I
No,
mean,
nobody's ever heard of Sprott.
No,
nah,
no, that's
nah.
right.
And you're still on the board there, right? You're still a little bit
I
active.
am
Yeah.
still on the board and still, in fact, the largest shareholder and chief beneficiary of Sprott.
Oh, yeah. Yeah. All
Interesting.
right. So it's worth mentioning.
Okay,
So Rick, you got your start in the commodities world in energy specifically, right? That
that's
was
correct.
your first love, your first success. There was some major news this week. Our good friends over in Davos, Klaus Schwab and those guys. We love Klaus, but
Yeah,
the Saudi finance minister is there in Davos with all of his billionaire buddies, and they're talking about the petrodollar and the South. They've been, with the whole BRICS thing with Russia, China, Saudi Arabia, Brazil. They've all been talking this new currency, this BRICS currency. But one of the biggest issues is Saudi Arabia and how they accept payments for oil. And back during the early 70s, when we went off the gold standard, what Kissinger did was he went to Saudi Arabia and he negotiated the what we refer to as the petrodollar.
Mm.
And they seem, which is what basically has kept a lot of the strength of the dollar after we got off of gold. But now the Saudis seem willing to walk away from that deal. Is there real risk here? And what's the outcome for currencies, gold, silver, if the Saudis do actually follow through with this?
that's a really nuanced question. I have a good friend and former client who's Saudi, who summed it up for me last week by saying, for 50 years, we felt secure being protected by the U.S.
Mm.
And now some of us feel the need to be protected from the U.S.,
Wow.
which is a very interesting lead. I think where we go from there requires a little explanation. The Saudis and other people are tired of the weaponization of the US dollar as an instrument to support the extraterritorial policy aims of the United States government. If you do something, if you are Iran, if you are Russia, if you are South Africa, if you are the Saudis, and you do something that's contrary to the US line, the U.S. threatens, first of all, to kick you out of the SWIFT banking system, despite the fact that it's international, and second of all, to take some sort of unspecified action, which has caused people to look for a way to defend themselves around U.S. extraterritorial ambition.
Mm-hmm.
The idea around the BRICS currency, I personally believe, is pretty much a non-starter. What you end up with is a euro of almost insolvent countries, pardon me.
Mm-hmm.
Doug Casey used to say the dollar is an I owe you nothing and the euro is a who owes you nothing. But the idea that individual countries, begin to settle trade on the margins in something other than the US dollar becomes important. If the Saudis sell the Chinese $1 billion worth of oil, and they buy from the Chinese $300 or $900 million worth of whatever gewgaws the Chinese manufacture, the net settlement number would be $100 million. And settling that net settlement number in reals, if you were the Chinese, which is, say, Saudi currency,
Mm-hmm.
or renminbi, if you were Saudis, that $100 million difference between the $1 billion export and the $900 million import is probably feasible in some medium of exchange that's less liquid than the US dollar. My suspicion, again, from dealing in my years when I was employed with very, very, very large sovereign investors, is as much as they distrust us in the US, they distrust each other more. And their currency of preference left to their own devices would be the largest, deepest, most liquid market in the world, which is to say US dollars. But to the extent that we continue to force them I think what will happen is that in bilateral trade, in particular, they will look for other mediums of exchange to cover the net margin in their trade. My own suspicion, looking back over several hundred years of world history, is that the chief beneficiary of this will not be a sovereign fiat currency, but rather gold. That might go to my own personal preferences, but I know in my past, when I have talked to very large sovereign wealth funds or very large supranational pension funds, that there is a preference over every other fiat currency, with the exception of the US dollar, for gold. And I suspect that the beneficiary of the trend you talk about in Davos will likely be gold. I think that you will see net margin transfers between countries like Russia and China in their own domestic currencies, and between the Saudis and China, as an example, in their own domestic currencies. But I would suspect that the medium of settlement after the US dollar will likely be precious metals. I think that the incredible pace of purchases by central banks of precious metals is a function of two things. One, if you own $1 trillion worth of US treasuries and the US Treasury is paying you 4 in a currency where your purchasing power is declining by 6 or 7 or 8, the US government is basically absolutely positively guaranteeing you a 3.5% loss compounded over 10 years, which is not a lot of fun.
Mm-hmm.
But the other reason for the disintermediation out of the currency is I think that a lot of central banks around the world foresee a period of time where they have to do net credit settlements, probably in gold, in preference to the US dollar.
Well, does that lead into, the Shanghai Gold Exchange that China is promoting so much? And in that, as just one example, Saudi Arabia could take their Chinese currency, the yuan, and immediately convert it into gold on the Shanghai Gold Exchange. If they don't want to hold, the dollars or the Chinese currency itself.
I'm an outlier in opinion here, but I think as little as the Chinese and the Russians and the Saudis trust us, they trust each other even less. And I think you'll see a circumstance where the Saudis will say, we'll keep our own gold, thank you. And the Russians will say, we'll keep our own gold too. And at some period of time, monthly or quarterly, they'll settle out the net difference in trade balances in gold.
Mm-hmm.
That makes an awful lot more sense to me than China replacing the U.S. as the custodian of choice. Remember that when Germany decided to repatriate their gold from the United States, the United States said yes, but on the installment plan.
7 years, wasn't it? Something like that.
Yeah.
Yeah.
And I don't think that lesson was lost on anybody.
Yeah.
It certainly wasn't lost on me.
And then they got back different gold bars than they actually had deposited with different numbers, right?
That's okay. Gold is fungible. I get that.
Yeah, no, but it's like what happened to our gold bars?
Yeah, but I think once the United States demonstrated to the world what a sovereign fiduciary is, in other words, oh, you don't like these terms? Have you seen our fleet?
Well, right. I mean, there's also another article that was out recently. Well, along the lines of that China, Saudi Arabia story regarding the currency, Iran and Russia. This is another story last week that came out on January 16th, that Iran and Russia are talking about a stable coin backed by gold. And Cointelegraph, it's one of the more, I guess, significant crypto related news websites. How do you interpret this type of article?
I think that the headline itself is an unintentional lie.
Mm-hmm.
The stable coin that is being proposed is one that would be denominated in gold rather than backed by gold. Jim, let's say that you acquired yourself a kilo of gold, or a stable coin representing a kilo of gold, and you went to Putin and you attempted to surrender your stable coin for gold. Good luck as a creditor. It's important to note the difference between a security that is fiat, that is denominated in a commodity, and a security that is in fact backed by and redeemable for the product.
Okay, so what you're saying that there's no if there's no exchange mechanism to take possession of the gold, it's not real, or
yes, and there wasn't a proposal to back the stable coin unit by unit with gold. In effect, this is at best a fractional reserve gold system. But as far as I can tell, there's no redemption feature, which means that the phrase backed by gold should be replaced by denominated in gold. And you, as a holder, continue to run the credit risk. You become an unsecured creditor of Iran, Russia, and China.
Gotcha.
Not my idea of a good time.
Because you can't redeem it.
Right. Well, I mean, even during the gold standard days, at the gold window at the Treasury, regular people could not go and redeem gold. It was only countries that could actually redeem gold, correct?
Correct.
So maybe this would be their idea would be something along Iran and Russia could settle up their stable coins, I don't know, once a month or once a quarter with a shipment of gold to balance things out. But I don't know.
That's my suspicion of what's going to happen. There may be a blockchain enabled smart contract, a system of credits and debits on the ledger that they agree to settle periodically in gold, which is to say the net difference. It's important to note that if bilateral trade between two countries is $20 billion, you don't need to send $20 billion back and forth. You need to settle out the net. And I think that the blockchain might be a very useful mechanism to keep that ledger by contract. But I don't think that impacts the rest of us very much, except that my suspicion is that one of the most important units of exchange going forward for bilateral trade to avoid the weaponization of the US dollar would in fact be gold.
So this is the long-term silver chart. And, going back at least, let's call it 11 or 12 years to the last bull market of the great financial crisis. And we seem to have bottomed. I mean, we're back above the 200-day moving average. And I don't know, there's sort of a wedge forming here. But what I know you're a long-time watcher of the silver and gold markets. What's your latest take on silver?
Well, Jim, I would describe myself looking at this chart as a beneficiary of the silver markets. Going way, way back, I've managed to participate in a couple of genuine silver bull markets, but I've also participated in some of those little perturbations that you see in the chart. And although those perturbations don't look like very big moves compared to, as an example, 2010, 2011, if you happen to be in place, they were extremely pleasant. What this chart points out to you is that silver rewards you infrequently. But when it does reward you, it rewards you exorbitantly. And the up move is so dramatic that the idea that a speculator can participate in most of the move by catching it technically after it's occurred is, from my experience, a falsehood. It's very difficult to jump onto, in fact, what's a vertical chart. So my suspicion is that most mortals, as speculators, have to be prepared to be either in the physical silver market or in the silver equities market, which is, by the way, much more dramatic than this chart. It's interesting. I look at discussion groups and people get excited about a move in silver for $1.50 or a move in silver for $2. I think they're in the wrong business if they care about that. You are in the silver business as a successful speculator if you are willing to endure dead money for 2 years or 3 years in hopes of realizing a 3 or 4 or 500% return in a fairly compressed period of time. The other useful comment that I have, Jim, and you alluded to this, is the fact that as volatile as silver is, it's somnolescent. compared to the silver equities. There are, I don't know, maybe 100 silver equities in the world, including the pretenders.
Mhm.
And my experience has been, and Doug Casey, this is a Doug Casey quote, the market capitalization of the silver equities, the combined market capitalization, is so small that when the generalist investor gets involved in the silver narrative, there isn't enough market cap to handle the money. The upside moves are ridiculous. Now, the upside moves don't occur frequently enough to excite many speculators whose attention span doesn't cover a long weekend. But for those who understand the nature of the business, I'll give you some history. I came into the business in the 1970s. There was a little Spokane penny dreadful called Coeur d'Alene Mines. It went from 10 cents to $65.
Jeez.
Not a reprint. Now, sadly, I was young and dumb. I couldn't spell Coeur d'Alene. I didn't own it, so I missed that one. Fast forward to 1990, though. My late friend Jim Blanchard caused me to be bit by the silver bug big time when nobody wanted it. And we did two things together. We did Silver Standard, which we financed at 72 cents with a $1.25 warrant. It went to $45. Then we did Pan American Silver at 50 cents. And for good measure, it went to $45 too. Now that got my attention. I mean, it really, truly got my attention. The underlying move in silver is pretty good. The underlying, I think silver went from $3.50 or $4 up to $50 or something. You know, a good solid 10-bagger. But the moves that occur in the silver equities when you have a real silver bull market, if you have prepared yourself ahead of time when nobody wants it, are truly life-changing. Mm-hmm. And that's what I want to leave people with when they look at that chart. And beyond that, the opportunities for what we laughingly call perturbations in the chart, which is what we might be in right now, I don't know. But there have been a score of junior silver equities without a real silver bull market very lately that have doubled.
Yeah, well, here's an example of what you said. One of these is Silver X Mining in Peru. And these things were buried down at, at 20 cents. And, as silver has risen up to from what was it, 19 or 18 up to into the 20s, this thing doubled. I mean, silver moved 20%, 40%, 30%, and the stock doubled. I mean, and there's numerous examples like that out there.
I think this needs to be shown to people. People complain about the performance of silver. Mm-hmm. And precisely during the period of time when they're complaining, they should be accumulating. And then they get real excited about the stock after the stock has doubled or tripled. In other words, they get in the game when the game, if it's a perturbation, is over.
Right. Well, here's another one, Outcrop Silver and Gold. Another one. It was down, buried down here when silver was at its low at 19, and the stock proceeded to double on just a $2 or $3 move in the underlying silver price.
Right.
So it just shows the torque that's involved in some of these plays out there when the market gets moving.
Correct. That's what I wanted to point out, that the upside and downside volatility in silver itself is pretty dramatic and worthwhile for a speculator, but it's really sleepy compared to the move that can occur in the silver stocks when silver gets underway. And then, of course, the tendency of people not to care about buying things when they ought to buy them, and their fascination with them when they've already moved.
Well, you've got a boot camp coming up on this very topic. It's a silver boot camp. When is that scheduled? And we'll put the link in the description for you.
The Silver Boot Camp is February 11th. For those subscribers of yours, and there were many who attended our uranium boot camp, you'll understand something about the format. We will have a wonderful overview of the silver market, both physical and silver equities, talking about the structure of the market, the impact of futures markets on silver, as an example, the interplay between physical and paper silver. We'll have a fireside chat where I interview people who have built multi-billion-dollar silver companies, so that you understand something about the process of building a company, which will make you understand more about how to speculate in silver stocks. I think that's going to be very useful. We're going to have John Champaglia from Sprott, who is one of the most important participants now in the physical silver worldwide with the Sprott Physical Silver Trust. We're going to have Maria Smirnova, also from Sprott, who has been a portfolio manager in the silver business, including managing some of Eric Sprott's own money in the silver space. And of course, like any educational product offered up by Rule Investment Media, there is a 100% customer satisfaction guarantee. If you pay the $99 tuition and you don't think you got your money's worth, I will give you your money back. So the financial risk is
Nice.
all of mine. By the way, Jim, this will really amuse you. 3 of the investors in the uranium boot camp who asked for their money back, and by the way, there were only 29 out of 3,200 subscribers. 3 of the subscribers who asked for their money back said that there was too much information, that it was more than they could assimilate. In other words,
And
they
that's
wanted
why
their
they
money
wanted their
back.
money back.
They wanted their money back because we gave them more than they paid for. Now, we
That's
gave them the
hilarious.
money back, and we regarded that complaint as a compliment. But I think it goes to the ability that we have to cover a topic as complex as uranium or silver in
Right.
8.5 hours.
Yeah.
By the way, if you attend the boot camp, it will all be recorded and you'll have access to all 8.5 hours for the next 6 months,
Cool.
which is really important. I've replayed myself the uranium boot camp, despite the fact that I put it on 4 times.
Remind yourself. Well, we're getting old. We forget, right?
Yes.
You got to refresh, right?
No
Well,
comment, Jim.
Yeah. All right. So the link is in the description to the boot camp if anyone wants to check it out. And I've attended them in the past, and they're very worthwhile. Rick, thank you very much, and let's do it again in a few months.
Always a pleasure, gentlemen. I look forward to it. It'll be interesting to see what that chart looks like in a couple of months.
Yeah, that's right.
Silver to the moon, right?